The early year trend continues as we see continual slow growth in the market. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, January 26th. We know that selling and buying a home can be very stressful and confusing. We do these weekly videos so you can know how the market is affecting you as a homeowner, thinking about selling, or someone who is looking for a house that you would love to call home. Let's take a look at how the market performed this week. There are currently 10 homes active on the market, which is one less than last week. The average asking price was $1,781,000 for those 10 homes, up from last week's average of $1,691,000. 5 homes went pending, which is one less than last week, with an average asking price of $1,492,000, which is much lower than the average pending sales last week of $1,773,000. And 4 homes sold, one less than last week, but the closing sales price was much higher at $2,136,000, up from $1,727,000. So now that we've seen how the market performed this past week, let's talk about the broader trends that provide insights into its overall health and potential future direction. Before we proceed, if you find this information helpful, you can subscribe so you don't miss out on future updates. And why not share it with a friend too? Everyone deserves to be in the know about their local real estate market. Let's take a look at those broader market indicators, shall we? Inventory dropped by 1 house this week. Low inventory is going to remain the trend and major theme of the market for the foreseeable future. Last year we saw exceptionally low inventory all year, and we are starting off even lower than the beginning of last year, now sitting at around half of the average of last year. And with the low inventory, it is very easy for our turnover rate to stay above 100%. Right now it's at 132, meaning homes are still selling very quickly in San Ramon. The turnover will not slow down unless we see a sudden spike in inventory. With the turnover rate above 100, it's good to be able to confirm whether that rate is a result of a surplus of interested buyers or due to that lack of inventory. The over-under metric is a good way to check that. If the closing sales price is consistently higher than the list price, that usually means that there are more than one interested buyers making offers on that house. Now, we're not seeing a significant amount over asking, but it is still over, meaning buyers are having to remain aggressive with their offers to win the bid. Just barely over 1. The average sales price jumped up rather significantly this week here. A trend we expected based on the pending values in the past few weeks. With our weekly average sales price jumping above $2 million again this week, I think it's safe to assume that the 30-day rolling average will continue to increase for the next few weeks. Home values are trending in a much stronger direction than they did at the beginning of last year, even though we started out at a lower average than we did at the beginning of last year. The tech equity market continues to improve. This week, the QQQ increased by another 3%. That brings it up to almost 24% over the past 3 months. As long as the tech industry continues to perform well, our real estate market will hold strong. The one dark mark on this week's performance is the interest rates. They bumped back up by 9 basis points, now sitting at 6.69%. We may be seeing this teeter-totter between 6.5% to 7% for a while. These rates remain the one thing holding this market back from really taking off again. This week continues the trend of the early part of this year. Slow but steady growth towards what we expect to see is a stronger spring market than last year. We are already starting off at a better spot than the beginning of last year, and as long as the interest rates don't take off, we expect to see continued growth heading into spring. It is still unlikely that we will get a large influx of new inventory, as the interest rates are locking people into their current mortgages. But even if the rates flatline around where they are right now, I think we'll see a busier year than last year. Thank you for joining me for this weekly update. We hope this information helped you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you stay informed on how the market is shaping up this year and how that affects you as a homeowner or someone looking for a house to call home. And if you have any questions about how you can navigate this stressful and confusing process of selling or buying, leave a comment down below or reach out to us directly. We are here to help you, guide you every step of the way. Have a safe weekend, and we'll see you next week with a new update.